Hello traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and we are going to check the euro, the euro pound and the S&P. Let's start with this analysis. Alright, so here we have the euro dollar, which has been building an interesting pattern. Probably a bullish setup that is getting ready for us this week. We were starting the week with a holiday in the US, and we can get ready for the setups for this week. One of the important aspects on the Elliott Wave theory is to validate what you are seeing, and not only in Elliott Wave, also in any technique that you are learning, is important to validate. Do you know what is the difference between the professional trader and the gambler? Most traders are gambling and they don't even know that they are gambling. That's a common problem. So to understand what a gamble is when you have a move up. Let's suppose that you are thinking is a wave 1, and then comes a wave 2. And you are here live, and you imagine that the price is gonna make something like this, and the price is gonna build a wave 3. So the orange lines are what you are expecting, and you make the decision based on what you're expecting, and you buy here. You are live here at this point, and you buy, and you leave a protective stop loss under the low. Your trade is based on the Elliott Wave theory. You are thinking that it's based on the Elliott Wave theory because you are having a 5-wave sequence and you are buying here, and you believe, okay, no matter how deep wave 2 is gonna happen during this process, and I'm gonna buy here because I don't want to miss the trade, or I don't have time, or I trust the Elliott Wave theory, let's suppose, right? So you are gambling because there is no evidence that demand is being built and the price can continue lower and can take you out. And here you're going to feel extremely frustrated with your trading. So one of the concepts that we work around here on the Elliott Wave Street program is that we look for the construction of demand during the corrective legs. And that's a key aspect that is going to change your trading forever, because when you look for a validation, when you wait for the construction of demand, is when your trading starts to change, and when you start understanding better how to validate the end of the waves. At the end, that's our job as technicians, as traders, using charts, is that we find the end of the cycles in order to trigger a trade. Could be with the trend or against the trend, but our job is finding the end of that cycle, of that wave, no matter what technique you're using to analyze the markets. So in this case, when we have demand, so we wait and see demand, and then we have a test. On Elliott, we call this the zigzag, ABC, or double zigzag, WXY, a 3-wave sequence. So when we have here the test, then we look for the price to return back above the wave A, and that's where we can buy it, because we're seeing all these events happening already. We are not forecasting, we are not trying to guess the future, we are not going to gamble, we are seeing all these events happening. So to keep things extra simple, and when you finish watching this video, you change this forever in your trading, and you start having this approach, is a leg down, a corrective leg that will show demand, a fresh low, and a rejection. Those are the steps of any corrective leg that you want to trade. If this is a second wave, if this is a wave 4, if this is a wave B, whatever, right? You can apply the same concept for all of them. If you are looking for a buy trade, and let's suppose that instead of having the rejection, you have a big sell-off, you are not going to buy it. So you are going to be safe. Let's apply this concept here on this a week trade, first weekly trade on the euro. So the first concept is that we have a leg down. The second concept is that we have the demand. And the third part of the process is testing the demand below the previous low. And if the answer is yes, so if the price comes down here and we have a turnaround, we can buy it here. That's going to be our entry point because the trade, the bullish trade, will be active. On the other hand, if the price moves down here and continues lower, we are not going to buy it. So this is to make the point to show you the difference between watching and looking for validation rather than gambling on a future scenario that hasn't been validated. Validation is key. Now, let's see this example from another point of view. As you can see, I have the volume profile tool here. If you want to learn more about the volume profile, we have a complete course inside our membership. So the volume profile is a tool not to forecast the future, but to show us the levels where the market is likely to return or to reverse or to change its direction. So the volume profile is a tool that helps us finding volume areas in a market that is impossible to know its volume. So the way the volume profile works is that takes the time where the price has been spending more time, more volume. So more time, more volume, less time, less volume, right? That's the logic of the volume profile tool. So when the price completes its cycle, like the one that we're expecting here on the Elliott Wave theory, this is going to be a low volume area. And low volume areas is where the price is likely to return. So if the price comes here to this low volume area, we are going to have, and we have the return and we have the validation, the volume profile is telling that this is the fair price and that this is the discounted price, plus intention to move up. So there are two things. The discount. If something is cheap, you might buy it or you might not. If you want to buy a new TV and the TV on the launching event was at 10K, and 2 weeks later you see the same TV at 5K, you might or not buy it, right? It's not because it's a discount that you are going to buy it. You're going to say, nope, I'm going to buy it once it reaches 1K, for example, right? Or you can say 5K is good. So is the discount plus the intention of the big guy. If we have everything working together, that's where we can buy it. And in this case, here will be our entry point, right? So is the volume profile is saying that if the price moves here will be cheap, and the turnaround will validate the second wave and will tell that some others are seeing the same value as you are thinking, and the minimum target will be the fair price and probably then the previous high. So that's the setup that we are looking for the euro at the beginning of this week. Let's have a look at the euro pound. That is another interesting one to follow this week. The concept here, traders, is that we are finding on the live market the completion of this second wave. That's our mission, finding the end of the wave 2. Once we have this completion of the second wave, the plan is to buy the euro pound and to target this previous high. So the process is simple. This is a liquidity area where the wave W finished. What is a liquidity area? Well, previous lows, previous highs, where there are stops, where there are sellers, where there are limit orders. So a lot of activity is happening here. However, it's a low volume area in terms of the profile because he's at the market extreme. So if you think a little bit deeper about this setup, professionals are not going to be happy to sell here. It's too late, right? So if we have these professionals, this smart money buying, we are going to see them first. So is the discount, and if the price returns back above this area, I have my pending order at the 43, 42 area. So if the price moves above this area, I'm going to buy it, and I'm going to leave the protective stop loss somewhere here below the low. So entry point, stop loss, and target. Look at the risk-reward ratio, at least a 1-to-2 risk-reward ratio. Of course, once the price reaches the 1-to-1, we can book partial profits. But we are buying below the point of control that is the fair price of the market. We are finding the end of the second wave, of the Elliott Wave second wave, at the discount. So never sell the lows. Never buy the highs. Always, if you want to buy at the lows. If you want to sell at the highs. All right? So even if you're in a trend, sell here, buy here, and you add your strategy. So you're not going to buy here just because the price is here. You are going to wait, like in my case, to the price to move a little bit higher to confirm that I have some good demand hitting the market. But I'm buying below the point of control. And you start mixing all these little details together, finding the end of the waves, and you start seeing the difference immediately with each little detail. So it's a matter of practice, it's a matter of buying the lows, it's a matter of selling the highs, always following your plan and having a good bias at the beginning of the session. That's the beauty of Elliott Wave. Of course, Elliott Wave is not going to be an entire solution for solving all your trading issues, but it's going to give you the market structure. And then, combined with price action, voila, we have a fantastic trading system that we can start following and we can start improving every day. It's a fantastic approach to find trades and to understand the market behavior. So, great example on the euro pound. Now let's move into the S&P. On the S&P, traders, we are looking for the continuation, another leg up on the S&P back to the previous high. This is a weekly chart, and the question is if this wave 4 it's over. Is the wave 4 done? Is the wave 4 complete? Well, probably we don't know that yet. If the answer is yes, and we're going to talk about that on the lower time frames, we're heading back to this previous high. Right there we have to be careful because probably the second wave will start and we don't know how deep this one is going to be. And of course, that will be a matter on the future. We are going to worry about that later. Our main focus this week is finding if this is the end of 4 to capture this swing back to the previous high. Simple strategy, right? The beginner, the Elliottian that is starting his career, that is reading the rules, the guidelines, will have a different logic than the professional. The Elliottian that is starting to count the waves and is finding a wave count will buy because this is a wave 4. And that's a common mistake. Because Elliott Wave is not a trading system. Elliott Wave is an analysis system. What makes Elliott Wave a trading system is the validation of the end of the trend or the end of each cycle. That's what we are going to apply here on lower time frames. Let's go to the lower time frames so together we can come to a trade. So last week after the employment report, we got this rejection. Beautiful as an educational example, but hard to trade because it was this happened after the employment report. So after the fact, this one we can see it and say, wow, beautiful trade, easy trade. But of course, when we are in the live market, the employment data has been released, a lot of volatility is happening, it's hard to jump in that trade. But the next trade, the next bullish trade happened here today in the morning in the Elliott Wave Street morning edition. We were talking about the setup and it's working nicely. So we have the rejection, A, B, C, the rejection and the price departs. The plan is to get here. Of course, today's holiday, markets are going to be closed at noon or already closed. And of course, it's a slow day, but that's the target. So once we get here, that's going to complete wave 1, and then we expect the ABC for the second wave, which, if everything goes well, and we don't have aggressive price moving down, here will be the next setup to follow after this rejection. Also, we are watching closely the oil price, because we need to have the oil to continue lower in order to confirm this bullish setup. Today oil, which last week was moving down, oil started to have a retrace. So we are in that process of validating the end of that retrace. And if everything goes well, hopefully after this horrible news over the weekend, but if everything goes well for oil and keeps selling off, we are going to confirm the medium-term bullish bias on the S&P. So traders, that's the plan. If you want to get this analysis on a daily basis, we have a great membership for you to support your trades, to support your process. So if you want to learn Elliott Wave, if you want to learn how to trade as a professional trader, we have on ElliottWaveStreet.com the membership. Inside the membership, you are going to find a lot of information. You are going to get access to the library of previous videos. You are going to get access to the daily reports. You're going to get access to the educational library. You are going to get access to the Telegram channel where I share my swing trades. So, a lot of value inside the membership. You can pick your plan, the Forex, the stocks, or the full access. And you will get immediate access to this fantastic Elliott Wave world. If you like to analyze the charts, if you like to analyze the markets from this technical point of view, you are gonna love what we have inside. So you can subscribe right now. We have the special of $19 the first month, so you can trial out the whole month the membership, and you will get immediate access. So come here to ElliottWaveStreet.com right now, sign up and get your account. Alright traders, please have a fantastic start of your trading week. Take care, bye-bye.